Okay, great. All right, let's start at Forex Factory. When you're making a weekly outlook, it's most important to check the news first. And why it is news is your roadmap. So as you can see, I only filter on the red folders. Orange and yellow, you can ignore them. There are some orange folders that can make a little volatility, but your red folders are the most important. And we see tomorrow is going to be a very interesting day. We're going to talk about it when we're looking at TradingView in a few minutes as well, because we have 3 red folders tomorrow. Let me check. It's now on. It needs to be on New York. But the thing is, tomorrow, I hope everyone's family, everyone is in safety, because we had some disturbances in the Middle East again, like a war talks. And when you have war talks, it's always bad because the market doesn't like war talks. So be careful tomorrow with your trading, especially around the open. So we have on 8:30, we're going to be live here in the school group as well. We have some crazy red folders, and we have I got the war opening, some war volatility coming up. So very exciting. On Tuesday, we have a GBP red folder coming up in the London session, and this is the big one for this week. We're going to discuss lots of CAT pairs as well in this weekly outlook. We have CAT CPI, just like USD CPI. CPI is one of the big guys, just like NFP. And it's going to be interesting. These are also red folders, but those are just speakers. Like Fed Chair Paul speaking can give volatility, so be careful. Sometimes before Fed Chair, the market just consolidating. So if you're like, hey, why is it around the lunchtime? Why is it consolidating? It's because this. The market's waiting for this. Wednesday, we have 2 GBP red folders, also CPI. So GBP pairs could also not move that much before Wednesday. Thursday, we have a unemployment claims USD, and on Friday, we have GBP. So if you look at this roadmap of news, our pairs with volatility are going to be the USD pairs on Monday and Thursday. We have CAT CPI on Tuesday, and we have GBP on Tuesday and Wednesday and Friday. So a lot of GBP news as well. Always go to Forex Factory before you're going to do your TradingView. Very, very important. So with that said, I'm going to change to TradingView. And probably most of you already seen the weekly outs on YouTube. When I do the weekly outs on YouTube, not gonna lie, it's easier because I'm just cutting all these times I'm stuttering or just ranting. But you guys are going to enjoy the rant. What we do, we start with the DXY, and we're going down the list. This is the short list I created this afternoon while looking at all the pairs. We're going over them one by one. And after that, I'm going to answer your questions, or perhaps you would like some other pairs to be discussed. And as always, we start with DXY, because holy shit, what a run we already had this month. It's almost only up. On the monthly, we're going to look at, we're always doing this. We're looking at old highs, lows. We call that external range liquidity. Or we're going to look at imbalances, or FEGs, for value gaps. And we call that internal range liquidity. Price trades only to these 2 points. So when I'm doing the weekly outlooks together with you, and also when you're doing your daily outlooks for daily buys, for example, you should look at where is the nearest or the closest old high or low, and where's the nearest imbalances or for value gaps on the higher time frame. So for example, here we are on the monthly. And the monthly, we don't have many imbalances. We had this monthly SIBI, but it is broken. So we're not going to use that anymore. So we're going to the lower time frame. On the weekly, what we see on the weekly, we already mentioned, we go from a fair value gap, we touched it, and then we moved away from fair value gap to a high. So from internal range liquidity to external range liquidity on a weekly. So this is already tapped. Where is the next point of interest for the weekly time frame? It's this swing high. And if you go on a daily, it's the most clearer right now. We have a few point of interest because we have this daily busy created last week as a point of interest. And we have a daily volume imbalance. You see this gap here. It's called a volume imbalance. A volume imbalance, it's like the same flavor as a fair value gap. It's under the umbrella of a fair value gap. It's just an imbalance in the market. And we also had that swing high we already saw in the other time frames as well. So that means, where does price likely wants to trade next to? And the honest answer right here is, you don't know. But we are professional gamblers, of course. We're going to look at what the price likes to do. Wants to go first to the external range liquidity and then go back to the internal range liquidity? Or does price first wants to go from internal range liquidity, so a little retracement or manipulation, and then expand higher? Those are basically two scenarios for this week. And these kind of scenarios you have like every week. And the cool part is about this, most traders don't trade Mondays. Why? They want to see the first move. They want to see, or going to the highs first and then to the fair value gap, or vice versa. What are we going to do? You don't know. My prediction, especially with the war talks, in war, the DXY goes higher. So I would say the volume imbalance is going to be our first point of interest for potential shorts on the USD pairs. But most of the time, I'm flat on Mondays, just because I don't know what the market's likely to do. So we have like, what is it? We are here around the 80s. So we have 100 points towards the value gap, and we have over 100 points to the high. So you're basically at a 50-50 point between these two PD arrays. So that's why I'm going to be flat on Monday. And the cool part is, tomorrow with the board talks and with 3 red folders, one of the moves is going to happen, guys. So that's amazing. And I will share that in the school community as well. Tomorrow, like, okay, we just saw the high being taken. Okay, nice. Now the high being taken, for example, now we're going to hunt for DXY shorts towards an imbalance that is created. And in this move, from external to internal, there are very nice long opportunities for the USD pairs. And also vice versa. When tomorrow prices tanks back to this fair value gap and you're expecting price to go up, then in this leg up, there's very nice shorts for the USD pairs. So that's my bias and my outlook for DXY. Then I'm also looking most of the time at the euro and the yen. And the euro, currently we went to a daily fair value gap, daily SIBI, and then from internal range liquidity, fair value gap, to a low, so external range liquidity. And we also have this daily fair value gap waiting here. So the euro just tanked like the whole week. That's why you saw Euro USD like tanking as well. We had a amazingly bullish dollar and amazingly bearish euro. So euro dollar will be very bearish. So also very interesting for this. Keep it in mind. So if you're only using DXY, I would add the Euro X as well to your trading view, especially if you're trading Euro USD, because you want to know what the euro does as well. And you treat the Euro X just like you treat DXY as one special currency. So the euro is kind of bearish right now. I want to see how price reacts early in this week. Going to the daily fair value gap, what you perhaps could see is a move from the daily fair value gap back to here, or vice versa. We're going to retrace a little bit towards this order block or value gap, for example, and then going lower. And again, on Monday or early Tuesday, you will see the move. And perhaps you know the AMD principle. Most of the time, early Monday, it starts with the consolidation. And for example, if you expect a bearish week, then on Monday, New York, or Tuesday, London, New York, you will get the manipulation move, the fake move. And then the rest of the week, it's called distribution. So accumulation on early Monday, accumulation, the fake move. And then the rest of the week will be a distribution until Friday's close. This is how a weekly candle looks. Vice versa for bullish. So for example, if you think we're going to get a bearish dollar, well, then you expect this move, manipulation move, to I hope you've seen the OTE video. So to a video to a price point in premium, perhaps the 78 level. And we have an order book right here. And then the rest of the week could be bearish towards all these failure swings, these lows. Not going to say that this is going to happen, but be aware of what price does early in the week, because that tells you your buys for the rest of the week. All right, then we're going to look at one of the ugliest price action I've seen in years. look at this. This is the daily on the indices. ES is a little cleaner, but also not very clean. Lots of traders only trade futures. And yeah, honestly, I'm not getting very warm of this, so I'm not touching this currently. But I'm expecting, based on ICT's seasonal tendencies, that we will see a little move higher before going downwards. Oh. And I'm saying that because ICT mentions at the April-May stage we are in right now, there will be an SMT. Perhaps you've already seen it, but I want to see, hopefully, a high being taken out and create an SMT with ES. If you don't know what an SMT is, one of the indices will make a higher high, and one of the indices fails to make a higher high, so they're not correlated with each other, and it could mean a reversal. I'm not going to be stubborn. Last October, when I was trading this one, I was very stubborn. I've shorted this whole move, so I lost a lot. I was like, no, we're going lower, because we were trending lower. And ICT says, at the end of October, starting of November, you will see the shift happening, and I saw it happening, was stubborn. So now what I want to see, I'm not going to be stubborn. If NQ displays downwards, leaving a value gap, I'm going to short the rest of the move, because we have lots of liquidity here that can be taken out. Same story for the indices. I'm expecting an SMT still to be formed, but if this already happened, that's fine. I will go to this be short. So kind of humble, nimble, I must say. Conservative on the indices. And then let's go to the USD pairs. And on AU, we have an interesting price action. I have here the market maker sell model. If you don't know what it is, market maker sell model is one of your highest probability short setups. And if you recognize it in the chart, you can frame your trades around this. So remember this, and I'm going to show you what's happening on the charts. So where is my good old friend market maker sell model? And I was noticing the following. First, you have that green box right here, your original consolidation. After that, you have that blue area. Then your gray area. And first distribution, second distribution. And now could be that low resistance move that can take us under this liquidity right here. So that's what I'm looking at for AU. And that correlates perfectly with the bias that DXY could go higher early this week. So I'm going to hunt for shorts for AU. What we could see, because if you look closely, I'm going to remove this for now. Just stay on the daily. We have a CB created right here. All right, there you go. A CB together with, what is this? Up close candles, taking out liquidity. That's an order block. So 2 scenarios here. If we're anticipating the low here, we're just going to go displacing lower, taking out the liquidity, and perhaps then higher. Or what would be the perfect scenario is we trade back into this CB with the order block, perhaps on Tuesday or Monday during the red folders tomorrow, and then go down even more. So, but keep in mind this CB. So if you take a trade, a short setup, make sure your stop loss. This is a big ass stop loss. So don't use this. We're on the daily for entry going to lower time frames, but be aware that you can get stopped out by price trading towards this CB and order block. So that's what about AU. Same story basically for EURUSD and GU. You get a smart money reversal here at the gray area, and we just had a big move down, and we're almost at the daily value gap, and we created a CB. This is the reaction of a euro that is bullish and a euro or a dollar that is bullish and a euro that's very bearish, you create like this big move down. So I'm expecting or internal range or external range liquidity. This is basically internal to here, or vice versa. So for euro also, and if we go into the higher time frames to the monthly, we have a monthly busy waiting for us. So that could be a price target as well. So if you see DXY pushing higher and higher, you know Euro USD probably wants to go to this area right here. But that's just 200 pips away. That takes a while. So for this week, your point of interest will be this busy and this SIBI, where we could ping pong between. All right. I see no questions this far. That's great. Then we go to GU. GU, we finally, I'm talking for weeks about this. We went through this monthly for value gap. I remember I was shorting somewhere right here towards the monthly value gap, something like this. And I was still waiting. I've waited for longer than 2 months for this to reach, so I'm happy it does. Yeah, same here. We still have some lows right here, some swing lows. So it depends mainly on what the dollar is going to do. Also keep in mind we have 3 GBP red folders. So GBP pairs could pass around a little bit, so lower probability, or higher if you're on the right pot. So this is your first point of interest, this low, and this is your other point of interest. So keep these 2 levels in mind when you are determining your lower time frame bias. Well, and you see almost the same at NZD USD. We have just taken out lows. We have some more lows, but also we created I'm sounding like a broken record, but all the USD pairs look like each other. We have a SIBI. So yeah, you know drill. Smart money reversal, first distribution, second distribution. My money is on shorts for NZD together with a bullish dollar. That's what I'm going to trade early next week. And the cool part is, if I'm wrong and dollar goes lower, then I take a loss and I'll shift my bias. You need to be flexible as a trader. But the most important thing for most traders is, how do you find daily bias? That's like the most common question I get. And that's just know your high time frame levels. So this low has just been taken, whereas the next low is right here, whereas your next internal range is here. Okay, well, go to the lower time frame and see where price wants to trade next to. All right, that's it for the USD pairs. And now comes some exciting parts. This is the Canadian pairs, and we have, if you remember correctly, we have on Tuesday we have Canadian CPI. And I took a nice long early last week. After that, I was trying to long these candles, so I took a loss on it. But I still think these highs are way too clean. So my bias for next week, early next week already, because we have CPI. My bias is that CPI is going to push the pairs above these highs. That's my bias, and I'm willing to lose this. I'm willing to lose a trade for this. And why I think that? Yes, we took out some highs right here, but like this is a swing high. This is not a swing high. We didn't take out any liquidity, so price didn't have much. How do you say that? Didn't have any reason to just reverse there. And that's why I think pre-CPI price is going to take out the early buyers, like I was with my trade. I think it was on Wednesday when I took it. I think I shorted this move, or I longed this move, so I went for a stop. But yeah, also if you look at this, it's not very nice. So yeah, again, I think we're going to see higher Canadian prices, and with that bias, I'm going in as well. If you look at the higher time frames, so here on the weekly, look at how beautiful we're respecting weekly busy, displaced up, weekly busy, displaced up. If we go to the daily, we just traded into a daily busy, and you guys who like the Fibonacci, look at where price came in your OTE and in your OTE area. Let me see if I have the OTE colors. Yes, I have them. right here. Look at how beautiful. This is your OT entry. It traded to it, and price closed above the fair value gap, above the BISI. So that means early next week, first point of interest for longs on Canadian pairs will be this one, this Sibi, as your there's a nice YouTuber. His name is Ario, big YouTuber. You should give him a follow as well. He's from the same country as I am. But this is your, I think he calls it his last line of defense. So your Sibi, so price needs to fight through this Sibi because the Sibi wants to let price trade downwards. But I think CPI will just push through this and take out these highs. So that's what I'm anticipating for EuroCAD. GBCAD, kind of the same. I shared this in the Discord group. I said that if this BISI doesn't hold, I'm talking about this BISI, this was 50% of the range. And what do I mean with 50% of the range? Swing low to swing high. And 50%, I marked them out. I don't like this gap box. I think it's ugly, so I'm just pointing out the 50%. And I said if this doesn't hold, or we'll see probably lower. Otherwise, we can see a daily internal range liquidity, so a fair value gap, towards external range liquidity that is this high and this high. And remember, I think Canadian pairs are going to go higher, especially if you look at the higher time frame here for GCAD as well. We have the weekly value gap. We had a little touch here, but we haven't mitigated it yet. So should be a nice long setup as well. And if Canadian dollar during CPI pushes lower, it can happen. I don't have a crystal ball. If it goes down here, also fine. Then you need to shift your buys to bearish for the rest of the week, and that's cool. That's cool. But my money, and especially looking at the price right now, how price closes as well on Friday, I think we will see higher CAD pairs. AUD CAD, I'm going to be a broken record again, guys. So what you see most of the time with different pairs, like the USD pairs, they have the same backstory, the same red line, same for Canadian pairs. We just traded to the daily BISI. We created a small Sibi right here. So for next week, first target is this, second target is this. And if we see lower prices, because don't be fools, we have a BISI right here waiting as well inside the monthly fair value gap still. So we could also do this. That's what I'm looking at for AUD CAD. And the cool part is, what I'm doing with you guys right now is just marking out the daily fair value gaps and the daily highs and lows, and also on a weekly and a monthly. That's all we do. And next week, when price goes crazy in the news, we're just going back to our levels. We know, okay, price is going to possibly react from certain levels, and we have them all marked out. So, for example, if we see early next week, we see a move to here, and then we see big displacement downwards, well, then you know, okay, we can take shorts setups towards this low, but my money is on the highs. And you just need to be flexible around what price gives you. Don't force your trades. My prediction, based on what I see right now, is higher. And you should be nimble, and because price doesn't always do what you think it does, and that's okay. That's okay. Be the professional trader that knows when he's wrong or not. Professional traders take losses as well. Well, this is the crazy pair from all the CAD pairs. This is just dollar doing dollar things. I have it because I want to see how it reacts during CPI. Yeah, we just took a buy side liquidity here. Next stop could be here. Let's see on the weekly. We don't have any Sibis or swing highs. So this is the first target. Let's see on the daily. On the daily, we have some swing highs left to visit. And we have created a BISI. So now again, we have 2 points of interest. External range liquidity, internal range liquidity. Or internal range liquidity, external range liquidity. And to give you a little extra, if tomorrow closes bullish as well, on Tuesday, there will be a new fair value gap created. Let me get my inner Picasso out. Green candle. There you go. If this is a green candle, then there's a new fair value gap created. There is no fair value gap yet, but if price is bullish tomorrow, there's a new fair value gap. So you can also get a trade from external to internals. And there's money to be made, lots of money to be made in this short right here. So that's for the Canadian pairs. Let's now go to the some GHF pairs. I don't like GHF pairs that much. I just right now I see some nice movement happening because on the higher time frame we still have some highs to be taken. Right here, this swing high on a weekly swing high. We were kind of close, and the price doesn't make sense to just stop here. So what I'm seeing right now is a weekly busy right here, and I see a high. Let's on the daily. What do we see? Not that much. We just took out some liquidity and we closed above it. So I think early next week we can have a long setup towards these highs, this swing high. Exactly the same for a euro. We just traded into a weekly busy, and I think this swing high is not going to hold. But yeah, GSF pairs, I must say, I don't trade them that much. So I only trade them when it's so obvious price wants to do something. So don't bet the farm on GHF is what's big in my journal. Lost a lot of money trading with GHF pairs. Yeah, but that's part of the game. Some pairs you love, some pairs you hate, and these are not my favorites. No, they don't. Yeah, same here. This could be an interesting one. Weekly Sibi, right here. Weekly Busy, right here. But on a daily, it's nicer because we already traded here into a Busy and we closed above it. So early next week, if we see price don't trade down anymore, but up, we can take a clean trade towards the weekly Sibi. So from the GHF pairs, I would keep AUD GHF in the back of your mind. Then GBP NZD. Yeah, again, same as GHF. I don't trade NZD pairs too much, but we have a clean, like you can call it a rejection. But when there's a swing low, you see swing low because you have a higher low here, a higher low here. Swing low created inside the fair value gap. This is a high probability low. It's for a journal. So I think this high is going to hold. This low is going to hold. And the cool part is we have failure swings here. That means low resistance liquidity. So early next week, I'm going to see, okay, then I'm going to lower time frames to the hourly, for example, and I'm going to look, okay, we have all these failure swings just waiting to be taken out. Do I see, for example, a move? Oh, this is not my arrow. You have a busy right here, for example. Here, I want to see this. I want to see displacement up. I want to see the buy program where all the discount arrays, all the busies, all the order blocks hold. And then I'm going to take a trade towards the high. If price doesn't displace early in the week, I'm just not touching the pair. But I don't want to miss that move. It looks kind of clean on the daily. Not gonna lie. Look at this. It's just, for me, it's just waiting to print that big green candle. Do you remember that market maker sell model? It's kind of the same with the buy model. We have the gray area, that smart money reversal here. We have that first push, first accumulation, second accumulation, and this is your ICT calls the silver bullet, that big move to the upside. This is your first green area. So yeah, GP NCD, don't sleep on it. Don't sleep on it. Then we go to the JPY pairs. And I know lots of you guys love the JPY pairs. So I kind of started to like them as well. I shared early in the week. This was on I think Wednesday. We could see a high taken and then trade to the daily for value gap, and in one move it did that, like same day, same move. So not a chance that I could have that. Now this for value gap, this busy is not valid anymore. We took out this low and we displaced above it. So we're not displaced below, but above it. So that's kind of strong. So I'm curious to see what the NCD JPY is going to do early in the week. We have clear swing lows. We could start a market maker sell model with a gray area here, and then eventually taking out all these filler swings. But what I honestly don't like that much here is look at the high that we still have left open here. So gun to my head, I would say we're going to go higher first. So we'll see that move down and then something like this. But just like the indices, remember that a few minutes ago? If price displaces downwards, leaving a fair value gap, you have your breaker here. This is your bearish breaker. If order blocks, so if price displacement downwards, don't be a fool and just short the hell out of NCD GPY. So I think I'm going to sound like a broken record if we're going to do this every day, because I'm going to trade live as well. But just have your daily, weekly, and monthly levels. Have them on your chart, and your trading is going to be so much easier when you are navigating at 5 minutes and you see, oh, we just took out the low. Okay, cool. We displaced upwards. Here you can frame your 2022 setups around, or your April setup, or whatever low time frame entry setup you like. Only trade it after you have passed a hard time frame key level. Okay, broken record is off. Let's go back to the chart. GBP JPY took a loss on this as well. I thought we were going to take out these highs, but price didn't want to do that. We just took out the low here. But just like with NCD JPY, we displaced upwards, just closed inside this busy. So perhaps we're not done with the upside. Same story. We still have buy-side liquidity resting here in the monthly. It is far away, but you shouldn't ignore it. Also here on the weekly, we traded to the weekly, took out weekly low. So yeah, I think we see a higher price for GPY still. So let's see what the price gives us. Let me mark out this. Then we go to Euro GPY. 3 pairs to go. Then it's time for questions. Euro GPY. This is the only pair who has that monthly CB resting here. We're still inside that. So that's why I'm not touching Euro GPY yet. Kind of same movement. Took out the lows here. Let's look at the weekly. This is like a copy of the JPY pair. We have a busy, weekly busy. My money is on still higher prices. But again, if you see that we're displacing lower, leaving a fair value gap, you can take a trade lower because we have some nice juicy lows here that wants to be taken out. Let the market tell you the story early in the week, and you will make amazing trades, amazing money. Even if you're funded or with your own capital, you're going to crush it, I'm sure. Okay, then CAD GPY. CAD GPY is going to be cool because it's a CAD pair and CAD has CPY. On the monthly, we don't see anything. On the weekly, we just traded into the weekly, so we want to see, does this hold? Do we create that spring low right here? And could we go to higher prices? On CAD GPY, we don't have that high, like in, like 1,400 pips, so you can discount that. You can ignore that. So yeah, could be higher prices. I don't like this high. This is not very nice. Like, you want to see a high displace, but this is not displacement. It's just cute little candles. So I don't think we're done with the upside on this pair as well. So kind of bullish on the JPY pairs. And I'm going to step on a lot of toes because I saw on the trading Twitter lots of bearish JPY. But that's the cool part about trading. You can be at the other side of the coin and just shift your bias. I want to show you this example. Example of a high probability trade. Last week, I shared this in the previous weekly outlook on YouTube. And it's basically exactly the same as we are now doing. Last week, it was, let's do a market replay right here. This is what we had. And I was doing the weekly outlook, and I was like, okay, it's Friday. Oh, we haven't printed Friday candle. Wait, let me print the Friday candle. Friday. On Friday, we traded into this busy, and we know price wants to trade or to imbalances, internal liquidity, and next to external liquidity, to highs. So I'm like, okay, this high is too obvious, right? You have literally a nice tap into the daily value gap. It closes above it, above the value gap. So then I went to the 1 hour and looked, okay, what do we have? This is not a very nice high. Yes, it displaces, but look at this. This is ugly. And we had that clear rejection on the daily. So I was like, okay, if we are in a buy program, do we respect all the discount arrays on the lower time frames, on the hourly, for example? We have a 1 hour busy. Respect it. It displays upwards from there. We create another busy. We respect that. And we create another busy. Respect it together with an order block. Why is this a high probability order block? Because these down close candles take out liquidity. They trade it to an imbalance in a discount array. Well, price displays again. Price trades one more time in the fair value gap. Displays again, leaving another 1 hour busy. Taps into the order block, goes away. And then I was like, okay, this is just child's play. Let's play this out. I took it, and it was a very clean trade right here. And what we did here was just looking at our higher time frames, internal range liquidity to external range liquidity. And disclaimer, this is not 100% like make money till you're a billionaire system. No, this is a way you can look at the market. The algorithms are just programmed that you trade from internal to external, external to internal. All day long. You can go to the chart. It's always there. So yeah, this is for AUD GPY. And let's see, with that in mind, how it looks right now. So we displace downwards. I'm 50-50 on AUD GPY. And why is this? We have this lows right here. We displace, but we are still inside the daily busy. So I wanted to see early next week, what does price do? Does daily candle closes below? And what happens if we close with a daily down close candle? First of all, this candle becomes an inversion candle, inversion value gap. And there's a new fair value gap created because of the down close candle. So then on Tuesday, you can get the most easy trade of the week. You can trade from internal to external, or price goes, it's already here, it goes from external back to internal. And in both moves, there's money. Keep it in mind. From internal to external, external to internal. All right, and lastly, I have the Euro GBP on the charts, and that's not a pair I trade because look at this, it's ugly. But when I am not sure if I'm going to trade, for example, the Euro USD or the GB USD or Euro CAD or GBP CAD, I'm just going to the Euro GBP and look at which one is stronger. So if this pair is, for example, on the hourly, on the 4 hour, it's going down as it goes right now, little upwards, but mostly down, then the euro is weaker. If this one is going up, I know the euro is stronger than the GBP. And if you buy something, you long something, you want to long the strongest pair. So if euro is stronger, I want to long the euro. If the GBP is weaker, I want to short the GBP. So keep that in mind. This is a trick I learned from a very good trader. All right, yeah, that's it for my let's call it a presentation or the first live weekly outlook. Very very exciting. Yeah, let's like you see right now. I'm starting to stutter because now I cannot cut this from the recording. Probably when this goes on YouTube, I will cut this out. But yeah, feel free to ask your questions in the chat. Are there any pairs you have a question about, or perhaps there's another pair you want to discuss? Let me know in the chat. The first question is, do you need to have an SMT to take a trade? I mean, reversal. Yeah, I think I understand your question. I would say I prefer it. And that's, of course, like a really political correct answer. And what I mean with I prefer it, just like you need to stack confluences on a trade. And what I mean with stack confluences If you, for example, take a short, let's go back to the chart. If you, for example, are framing a short setup, and price does this, okay, something like this, and you want to, okay, this is a higher time frame. This is, for example, a higher time frame high, so okay, something's up. I'm shorts are on, it, and you want to, for a high probability setup, I always say you need to stack confluences, and a confluence is just a PD array. So first confluence could be a fair value gap, and the other one could be a bearish breaker. So you've already two confluences, and perhaps there was a order block right here, somewhere right here. Then you have three confluences, and if you also, for example, this is an SMT is between correlated pairs. So for example, this is a euro pair, took out the high, but your GBP pair did not take that high. Then you know there's an SMT. So you have a fourth confluence. And the more confluence you can stack on each other, the higher probability the trade is. Does that make any sense? Okay, great. And perhaps a rule of thumb is I try to have like 2 or 3 confluences where before I'm taking the trade. Don't do one. Don't be that guy who only trades from one fair value gap or from one order block. It works, but it doesn't work as well. If you are going to risk your money, demo, prop firm challenge, or a real live account, just take high probability trades or don't trade. Go watch a movie, or just, I don't know, go play blackjack on your mobile phone. I don't know. Amazing question, Isam. Do you use time as a confluence? Definitely. Kill zones. Definitely. And for kill zones, I think there's already, I think the video is already online in the 2024 mentorship. You can check it in the school under the classroom, the 2024 mentorship. The kill zones, most of the time, high of the day will be set in London. When you have news in New York, red folder news, the London higher low can be taken out. So you have a higher low today on New York. But most of the time, there we go, stutter. I'm going to cut this, but statistically, London is the time frame where the high of the low today is going to be set. Solomon asks, can you give analysis on gold? Yeah, of course. You're not going to like what I have to say, I think, because XL USD, of course. And why I say that is you've listened to like the last 50 minutes or so. So you know what I want to see. I want to see on the higher time frames fair value gaps and highs and lows. That's only what I'm looking at in the higher time frames. Let's do the same on a weekly. It is the monthly. On a weekly, we have this busy. And also, we have a small busy right here. But you see, it's already tapped like with a little bit and take away. So I'm going to just let it be because I already have a monthly busy as well. And let's see what we have on the daily. Going to play the same game. You know the game. Am I this far off? Oh, hold on. There we go. So, now where is your busy? Your value gaps right here. It's a really small one. No, not yet. Like, I think your closest one on the daily is here. So where's your first point of interest? Perhaps it's a question you have in your head. If you have a weekly, a daily, and a monthly all near each other, which one should you look at? The higher the time frame, the higher in the hierarchy. So a monthly busy is stronger, higher in the pick order than a weekly. It's just because it's higher time frame. But the first thing you're going to encounter is this weekly busy. So Solomon, I'm not touching gold. So this is like, don't copy any of this what I'm saying, because I don't think trading a metal inside a war period and with the current situation, just like trading Bitcoin. It's kind of tricky because it's not only technicals, it's lots of fundamentals as well. But just look at, okay, what's going to happen first? Do we see a trade towards the all-time high again, and we can frame a short setup towards the BISI? Or do we see early this week and move towards the BISI, and you can frame a lower time frame entry towards the high? And if you look at the last, what is it, like last 6 months, don't be the guy that don't be the guy that is shorting gold. Don't be like, I see on Twitter lots of guys who have an amazing short on gold, but don't be that guy that's going to short this. Just don't do it, because you are in a hyper bullish environment. Of course, you can short it. Like, let's go on the daily. Of course, if you took this short, well done. If you took this short, well done. But there are not many high probability shorts in the last year. Like, look at all those green candles. So when you see price dropping inside a discount array for longs, yeah, be my guest. Go for it. So for example, here, I'm going to remove the daily. No, I'm going to remove the daily BISI and a monthly BISI for now. So go to the 4-hour and look, for example, if price comes here, probably take out this liquidity, this swing low, equal lows, and then look for perhaps a kind of setup like this. But in a hyper bullish environment, influenced by lots of fundamentals, I'm personally not touching it. So I'm going to remove it from the list. Does it answer your question, Solomon? Like, is this analysis you are agreeing with, or you have maybe a different opinion? I would love to hear your opinion as well, of course. Let me check Isam, because I saw the reversal or retracement. I'm not sure what you mean with the last thing you said, Isam. It's always a percentage between London close or New York afternoon. Yeah, like every day is an AMD. Every day you see accumulation, manipulation, distribution, or vice versa. In some way, you see this on every chart. And this move, like your accumulation, I'm sharing it a lot also in the Telegram, and I will share it also in the for now in the school group and also in the live channels. This leg is London most of the time, your manipulation leg, and this is New York. So this is most time Asia, and then early London, you see a high being taken out, or liquidity being grabbed, or trading into a BISI, and then you see that, I call it the A plus setup. You should watch the I think it's episode 7, something from the mentorship, and then you can hunt that distribution towards the low. All right. Any other questions? You're welcome, Solomon. You're welcome. All right. I don't think there are any questions. If there are questions, we can do it now. Also tomorrow 8:30 Eastern Standard Time, so New York time, 8:30 start the New York session. We're going to watch that red folders play out. Really interesting to see. I hope you enjoyed this. If you did, also, if you have some friends, trading friends, relatives who are into trading or want to learn to trading, I want to make the school group like the one-stop shop for every level of trader. I'm going to add a beginner course as well, like beginner, like how does trading view work, and how do candles work, and like basics. They're going to edit as well. But yeah, invite them to the group. And I saw lots of you already introduce yourselves in the welcome group. Please do it. Grind that leaderboard. There are lots of cool prizes coming up as well. We're going to do giveaway challenges for the higher levels, private groups, private sessions, like all focused on your growth. All right, that's it. That's it for the weekly outlook. Thank you for being here. Good luck trading, and we'll be back 8:30 tomorrow, and we're going to tackle those red folders on the USD. Have a great Sunday, and we'll keep in touch. Bye bye.